Can I just pay extra payments on my mortgage?
You could pay extra payments on your mortgage, but again, we go back to a mortgage is a closed-end product, meaning it's not liquid. You can put as much money as you want to in it, but you have limitations of how much money you can take out of it, which is zero. So it's only a loan, a debt tool that you can pay down, not loan against or borrow against or take cash out of without refinancing or getting an additional loan. A HELOC is a two-way street. Money goes in and out freely, 24/7. So when you say pay extra, think of it two ways. One, you put more money into, but you can't put all of your money into it. You could for the first month, but then you're going to realize you made a major mistake. Make $10,000 a month. I put $10,000 worth of my income into a mortgage. Nobody does that, and they know why, because it's a closed-end product. It's like, okay, I just put all of my resources into my mortgage. Now it's time to pay the bills. I can't. So that means you can only put some. So let me just ask a very simple question. You have one product that you can put all of your money into because you have the comfort of having that liquidity, and you have another product that you can only put some into. We don't even have to get too mathematical. Which one do you think is going to be far more advantageous? The one that you put some money into or one you can put all of your money into? Obviously, the one you put all of your money into. So you could pay extra on your mortgage, but again, one of the benefits of a HELOC that doesn't get talked about enough is liquidity. So even if you could keep pace with the home equity line of credit, let's use really great example on a mortgage side and a really terrible example on a HELOC side. Let's say you got a mortgage of 2.75 and you got a HELOC rate of 12%. I don't even know that exists. I've never seen that, but I'm sure somebody out there has a 12% HELOC. Let's say mathematically now you're paying down at the same pace. It's like, okay, the mortgage I can pay down at the same pace as I do the HELOC because of the disparity of the interest rates. All right, but one is liquid and one's not. If it's the same pace, you're going to pay the same amount of interest, roughly. So what are you willing to pay to have access to liquidity? And I would argue, even if the HELOC costs more money, not a whole lot more, it can't be substantially more, but if I had to pay a small premium just to maintain liquidity, I would choose that because liquidity is extremely valuable. Because when you have access to capital, you're going to spot opportunities. When you spot a good opportunity that then turns into more income, then you negate interest rates altogether. That we do have some clients that make so much more money than what they spend that they are what we call interest rate immune. It does not matter. So we go back to biweekly payments on a mortgage or paying extra on your mortgage. If that's all you're going to do, I encourage you to do that. If you're not going to explore, converting your amortized installment loan debt like a mortgage into simple interest, line of credit, recasting every single day for free type debt, far more efficient. If you're not going to entertain that, then I encourage you to pay extra on a mortgage. However, I will tell you this, less than 3% of Americans pay extra on their mortgage. And then I would ask you just said, well, couldn't I just pay extra on my mortgage? I would turn the question back around and say, when's the last time you've done that? 9 times out of 10, the client says, well, I never have, but I could. Okay, well, why haven't you? Let's go down that. Let's, think about that from an emotional standpoint and a financial standpoint. Why haven't you? If you're arguing that that's good and better, why haven't you done so? And what we'll come to is I don't want to part with my cash. I lose liquidity. That's why I don't want to pay down extra on my mortgage. Okay, then what's going to change in the future? Nothing, because you're not going to change the nature of the lack of liquidity in a mortgage. So if that's not going to change, are you realistically going to change? The answer is no. Then let's change the nature of liquidity and get into a product where you do feel comfortable paying extra on. And that would be a home equity line of credit.